Welcome back. Sanlam has reported a strong operational performance at the halfway stage of the financial year, achieved against the backdrop of a turbulent global operating environment. The insurer posted increased new business volumes benefiting from increased investment management and general insurance inflows locally. CFO Abigail Mukhuba joins us now with her assessment of that performance. Thank you so much for your time, Abigail. Actually, let's start off there. How would you describe the half-year period for the company amidst this increased instability in the macroeconomy?
Good evening. We've looked at it as a very strong delivery of our financial results, which is a culmination of good efforts from our teams in terms of our own staff, but also our staff partnering with our clients to make sure that during such a difficult time, we still provide solutions that are appropriate, that meet the needs of our clients. And I think our delivery this half talks to the value proposition and the offering that we give to our clients, that even during such tough times, they still stuck with us. It also talks to the diversity of our portfolio. We've got multiple lines of business, and this time around, our general insurance business performed quite well. Even the other lines of businesses performed very well, but our general insurance business performed even better than the other lines of business if you just compare on the 6 months. So I really do think it's a combination of the teams within the business, but also partnering with our clients to provide appropriate solutions.
Well, I mean, talking about diversity, of course, we know that that is also geographical diversity and diversification. Just what kind of the level of upside were you able to capture in the different regions?
I think if you look at it at the portfolio geographically, I'm very proud again of the 3 regions where we perform. We've got obviously the base or the home market being South Africa, being the majority of our earnings driver, about almost 60%. And then you've got the Pan-Africa portfolio and the India portfolio. The Pan-Africa portfolio was impacted by some structural corporate activity, but if you look at it on a like-for-like basis, also a very strong performance there. And let's not forget that the Pan-Africa portfolio is actually over 25 countries that we cover. India, just on scale alone, is quite a significant business. So I think if we look at the overall regional representation, again, a solid performance across all the 3 regions.
All right. Well, I mean, just as we're talking about, you know, the tough economic environment, and actually quite interesting that you talk about the upside that you caught from the general insurance landscape. How are your persistency levels looking at this point?
Historically, we were quite concerned about persistency in our, let's say, in the life business in terms of our entry-level market.
Yeah.
And we put in a lot of initiatives to make sure that both on the management side, on the advisor side, and our brokers and advisors, but also making sure that from, as I said earlier, from our customer proposition, you want to provide services and products that make your customers stick with you. We've actually seen over this period that persistency in the entry-level market, regardless of the difficult operating environment, has actually improved. So it's doing quite well. And then in terms of retaining business, for example, in our general insurance business, I think over the past few years, with all the incidents that we've had, we've also made sure that we've got responsible premium increases, not too excessive, and that does also help you with retaining some of your clients, because sometimes people are just looking for value for money, and then especially in the direct to market business. But if you look at the quality of the business that we've written, you can see that we're actually retaining our customers, both in general insurance as well as in the life insurance.
What have your new business dynamics actually looked like in this particular environment? And I see that there were movements in some areas from high margin products to lower margin products.
Yeah, so a lot of that is impacted or driven by what your interest yields do during the period, and you will know that with the yields having come down compared to last year, people do switch from one product to another. What is exciting for us is that at least they're switching within an offering that we provide. So whether you're moving from a high margin product to a lower margin product, but it also talks to the flexibility in terms of our offering offering when I say that you've got to be able to offer products that suit the environment that you're operating in. And the fact that we've seen, I mean, for our clients, it's important that short-term interest rates come down, because then it makes disposable income, it stretches a bit far, right? But in the long run, you also want, from a business perspective, you might also want the environment is turning, where short-term interest rates are coming down, and our clients hopefully will have a bit of extra disposable income that they can reinvest elsewhere in some of our products.
And of course, you know how turbulent the markets have, the financial, the stock markets and bond markets have been. So let's drill into the investment management division. What was the difference between the South African businesses and international?
It's really just the product solutions that we offer. We've seen that a lot of our clients are looking towards passive and alternatives relative to active management. And our offering is really, with our multi-manager business and our alternatives business, we've created quite a sweet spot there. Our Satrix offering is also quite popular in terms of providing client solutions there. But also because of our presence, both locally and internationally, we also create the flexibility where if clients, although based in South Africa, they want to invest internationally, or they have portfolios internationally, they're able to do that still within the stable.
All right. And just looking at, you know, the future, and I guess the near future, what is Sanlam's focus in the short to medium term as it does deal with these, you know, market sensitivities that persist, but also with the moat that Sanlam has built and is continuing to build with these strategic acquisitions and partnerships?
So the strategic acquisitions and partnerships, as you say, it was and is to create a moat around the business, but it's something that we can never be complacent about. So our focus really is making sure that we integrate on the transactions that we have already delivered on. I think we've created a track record in as far as integrating businesses like our Sanlam Alliance joint venture. We've done the same with Asupol. Both of them continue to be still in integration, and we are already realizing some of the synergies that we saw when we went into the transactions. So in terms of our priorities, we want to continue to bed down the foundation that we're laying in terms of future growth. We want to make sure that our 3 regions diversification remains, because that will also make sure that we've got sustainable earnings opportunity going forward. But also we want to create a platform where we can have significant growth going forward.
All right. Well, thank you so much for your time and giving us more detail on those results that came out from Sanlam this morning. Appreciate your time as always, Abigail. That was Abigail Mukhuba, CFO for Sanlam.